Hello, Brian. Nice to see you, mate. It's a
Hey,
sunny
Woody.
Tuesday, and it's always good to see Brian Chu on a Tuesday.
Yeah, and I'm looking forward to be down in Melbourne tomorrow evening
Yep.
for the Bullion Bordeaux Hour on Thursday and the Work Christmas Party on Friday.
Yeah, and just so that everyone knows, the Bullion and Bordeaux Hour is a kind of private members podcast, detailed podcast that Brian and I do for members of Brian's Gold Stock Pro investor service. But we're talking about gold today because there's been a bit of news. There's been a huge discovery, new gold discovery in China. So that's really the focus of your piece today. Um, now, it kind of opens up the discussion, and you sort of go into other things about how the gold market works. And one thing
Hmm.
that's I found quite interesting is that you explained how the daily trading of gold contracts kind of dwarfs the physical supply. Um, so, for investors, just to kick things off, trying to understand price movements and what key
Hmm.
market indicators should they be watching instead of physical supply and demand news.
Yeah, um, I think a lot of people do actually want to know how the commodities market works, and what moves prices. And it's not just for gold; it's for a lot of commodities. Now you have, of course, the mining companies that produce the commodity, sells it to a dealer, and the dealers or the refineries they they actually make process and refine the bars into and then sells it to either industries or jewelers in the case of precious metals, and and then of course to the retailers. Now, most of the time, you'll hear about the financial commentary in the newspapers, websites, etc. They talk a lot about physical gold, like the purchases and sales between the miners, refiners, jewelry stores, and of course the industries that use it. And then they talk about how um, the rise and fall in the supply and demand drives prices. But most experienced investors know that, as you mentioned, that actually the physical movement of metals, especially with gold and silver, are dwarfed by the volume of contracts that are traded by investment banks, hedge funds, and other participants in the commodities exchanges. So, therefore, I always find that it's a bit of a red herring when they talk about big gold discoveries, when they talk about a particular time of the year when, for example, Chinese New Year, Indian Diwali in India, there's going to be more buying and selling of gold, etc., and that should move prices. Like I don't discount that those are important times, but the real moves are made on the trader's desk in these investment banks and financial institutions.
Why does such a big, I mean, that's what you call the paper gold market, right?
Yes.
Why does that have such a big influence on the price over supply and demand?
Well, the thing is, on a daily basis, there's as much as like 20 billion dollars of 20 to 40 billion dollars of gold contracts being traded on a daily basis. Now that equates to, if I recall correctly, like 80 tons, 80, I think 80 something like 80 tons of gold traded on a daily basis.
Hmm.
And you cannot imagine that volume of gold being moved around. In fact, a lot of these contracts, if I recall correctly, um, one contract could equate to, um, I think, a few tons. No, sorry, tens or thousands of ounces of gold, and those are leveraged trades.
Mm.
That that way, those are really for the purposes of either managing the exposures of investment banks in their various deals with different parties, or they're facilitating uh, businesses trying to either protect the exposure or lock in the price of a trade of physical metals, or in some cases where there's what we call prop trading, as in proprietary trading, where investment banks and hedge funds use their own capital to speculate on the price movements
Yeah.
for profiting purposes.
So just how big was that? So let's just bring people up to date with the news. So obviously there's in the what was the region in China?
It's in Hunan province.
Right, and it was
So
a pretty significant new gold find, right? And
yes,
what are
so
we talking? How big are we actually talking, Brian, in
we're
context?
talking about 1,000 tons of gold reserves. Um, so the difference between resources and reserves are resources is a confirmed deposit of minerals beneath the ground.
Hmm.
And it's based on like drilling many holes in the ground and finding, and just based on the veins that you that they come out with, you get a model and you estimate what the shape of the body looks like, and then you estimate the volume of the soil, the concentration of the veins of minerals in there, and so that's the resources. Reserves is actually a more specific class of resources, whereby this is the deposit which you could economically extract, because there's enough concentration, and the estimated cost of extracting the gold makes it profitable.
So that's more true to what, in terms of weight, what would actually be extracted and being able to sell for the company onto the market, so to speak.
Yes, that's correct. So they're estimating that there's 300 tons of ore reserves within 2,000 meters underground, and within the first 3,000 meters, there's 1,000 tons of gold reserves, and the market value of 1,000 tons of gold is approximately 130 billion Australian dollars.
Now, you also sort of compared this to a pretty decent African deposit that was discovered only a couple of years ago. Is the comparison? What was the comparison? What was the purpose of using that comparison?
Yes. So the thing is, back in mid 2022 in Uganda, there was an announcement from the Department of Energy and Resources of Uganda, where they said they found 31.1 million tons, not of gold, but gold bearing rock.
Right.
And they estimated that um, there could be up to 320,000 tons of refined gold out of that 31 million tons of gold bearing ore. Now, the market value of 320,000 tons of gold would be 26.4 trillion US dollars, or almost 40 trillion Australian dollars.
In other words, quite a lot.
Well, it's actually more than 50% more
Yeah.
than the current amount of gold that's been mined out of the earth throughout history.
Right. So pretty significant.
It's significant on that front. But when I read between the lines, I thought there was a possible reporting error, and that's actually one thing I wanted to highlight in this article, to remind our viewers to not just fall for the hype of media reporting and run with the numbers that they're given. Now, the reason why I highlighted this Uganda gold deposit is the fact that they claim to have, or at least it's reported, there's 50% more gold uh, beneath the ground in that deposit than what mankind has unearthed out of the ground over history. Is that if you have 31 million tons of gold bearing rock and there is 320,000 tons of gold, that's actually saying there's 10.3 kilograms of gold per ton of rock. Now, that sounds that doesn't sound like much. Well, 1 ton of rock, 10.3 kilograms of gold, right? But in most commercial deposits, we're talking about just over 1 gram of gold per ton. So to have 10.3 kilograms per ton, it's either extremely spectacular, and therefore you could basically go in there with shovels and picks and shovels rather than machinery. Now that doesn't sound right, and I suspect it was probably exuberance from the government. It may have been an honest mistake, or the reporters just ran with the story and didn't run through the numbers and scrutinize it as they ought to. So that media hype itself um, eventually just fizzled into thin air, and there hasn't been much updates since those set off.
So, do you think is the purpose of just comparing the Ugandan gold announcement versus the Chinese discovery is that you're highlighting the importance of doing your own technical due diligence, especially if you're investing in and stuff in this market? But what specific metrics or red flags should investors look for when evaluating news about these types of discoveries?
That's a good question actually. Now I don't expect every single reader to be able to have the knowledge of a geologist or someone with more mining knowledge than me to be able to read between the lines on these. But I believe what's important is when there's news like this about a big discovery of gold in a particular place, whether it's China or anywhere around the world, the automatic reaction that people have would be, well, that's going to move the price of gold. Now, if it doesn't move the price of gold, then the question is, well, what's going on? And I want people to kind of piece together some of the ideas that I have in this article. The first thing that we mentioned about was what drives the price of gold in the commodities exchange. And we've worked out that it's the trading of digital contracts from investment banks and financial institutions that drive the price of gold, not the physical metals being purchased and sold. Secondly, there's about 230,000 ounces of gold, I think, mined out of the earth uh, since the dawn of time. So 1,000 tons of gold beneath the ground is really not much. Now, on that front, it might sound like I'm pouring cold water on this news and that it's don't worry about it, ignore this news, focus on other investments. But that's not really the case because this news will, or obviously, the market moves a lot more on hype than facts. And clearly, a 1,000 ton world's biggest gold discovery is going to drive a lot of people's interest. And in my case, why did find out about this news? I didn't read about it. I heard about it from from Cyrus, my son. His the parents at his school. Some of them know that I'm interested. I'm into gold, and they were telling me about it, and they were going. They were talking about how it is a time to buy gold. So it's got them paying attention. So obviously that's going to prick up the ears of the general investors, and that's what excites me from from the perspective of a precious metals and mining stock investor.
Yeah. You actually mentioned that gold stocks aren't in a bubble like lithium, nickel, uranium were. What key differences do you see in the current gold market, in the current gold stock market structure, I should say, sorry, that makes it more
Yes.
attractive?
Now this might be a surprising claim that I make that gold stocks are not in a bubble, especially when we've seen several large gold producers break all-time highs, including Northern Star recently. They broke above $18 in the rally in October. We also saw Capricorn Metals rise above 650, and at once I think it might have almost breached $7 at one stage. Let me just quickly check. No, 664, but it's within a whisker. And we also had several smaller gold mining companies break out, like Southern Cross Gold, Spartan Resources, and of course Degrade Mining, which broke above $2 after receiving a bid from Northern Star yesterday. And it is probably going to be one of the biggest takeovers in for Australian listed gold stocks for this year. We had Newcrest last year, of course, taken over by Newmont. So, what I mean is, you have these larger companies breaking records, but why is it not a bubble? It's because why I mentioned some developers and some explorers have broken records. More than half of the explorers, the small cap gold mining companies and silver mining companies are still trading at near lows. Some of them are even making new lows, even at record gold prices. So until those companies break out, like we've seen with lithium, uranium, copper, and even oil back in 2022 to 2023, these companies, when those metals went into a bull market, people were chasing the the small caps. That hasn't happened yet with gold, and that's why I believe with gold stocks, there's plenty of opportunities with the explorers. But a caveat in this one is many of these companies will only run with the hype, but once that hype is over, they'll come back down because the assets that they have, the exploration properties, there's not much development. So you've got to be very selective with these companies.
Got to be selective, but that's where you see the opportunity. Okay, Brian, we'll leave it there. Thanks for your time today. Looking forward to seeing you in Melbourne this week. And for those watching, do check out Brian's article today. It's absolutely free. It's on our website, link below. And do comment below, ask any questions. And Brian's always particularly good at getting back to all the comments. So ask away, and he'll respond. Hey, Brian?
Yep, that's right. I
All right.
love reading your comments and look forward to more. I'll see you soon, and God bless.
Thanks for tuning in to FatTel Daily. If you're ready to take a new approach to building wealth, avoiding the same old mainstream ideas and investigating new market trends, then make sure to hit the subscribe button and turn on post notifications so you don't miss a single video. And as a thank you, we've got a free report just for you. It is packed with actionable insights that show you how to capitalize on an alternative investment idea that you'll unlikely find anywhere else. You can download it right now by clicking on the link in the description below. So, if you're ready to discover strategies that the traditional market just doesn't offer, grab your free report. Until next time.